September 22nd, 2025, Micro Dow Futures, 1 minute chart. We'll cover the 5-wave move plus more, reversal expectations, poor structure, fair value gaps, entry exit, stops, and then I'll address the circles on the chart, of which we have two. So let me move this out of the way, and then let me zoom in. Okay, so here's market open, price pulls back, and then we get candle body. So this gray candle body is over this candle body, so that is a wave up. We get to pull back down here. This candle body, the body, not the wicks, not the tails. This candle body is underneath this candle body. How do I know that? I know that from simply looking at my chart, and you can see this gray or this orange wick or this orange wedge. That orange wedge tells me that this candle body, the high of the candle body, there's a gap between that and the low of this candle body. So just to read this out, this candle closed at 46,394. This candle body opened at 46,393. So that's a 1 point difference. And on the Dow Futures, they only trade in points. So this is candle body wave 1 up, it's pull back, wave 2. Well, we don't know actually until wave 2 is happening, until we see candle body. This candle body is clearly above this candle body. We also did get a push above wave 1, so this is good momentum now to the upside. So we'll just follow this all the way up until we see candle body under candle body. Okay, here we go. This candle body, identified by my wedge, shows that it's under this candle body, so that is the termination of wave 2, right? We don't know how low wave 3 is going to go, but as soon as we see candle body over candle body, then that is the termination of that particular wave going down. Price is now going up. It's also above wave 2, which is good. And you can see this was a very good push all the way up here, and we top out. How do we know that price is no longer going up? Because we now have candle body under candle body. Price then goes sideways. Now we have candle body over candle body. So now we know price is no longer going down. We need to see price pushing above the previous wave. Here we get a price pushing above the wave, but you can see that this candle body intersects this candle body here. So that's not the end of the wave. And now we're getting candle bodies printing above wave 3, which is good. And then ultimately price stalls, and we get this candle body is clearly under this candle body. So now we know that was the high of wave 4. We get a pullback, 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 pullback. And then here we get candle body over candle body. So this looks like the beginning of wave 5. I'm going to scroll to the right. And price is going sideways, still above this wave 5 body low. And then price dips down and makes a new low under the previous wave 5 begin. And then we get this candle body, and then 3 candles later we get candle body over candle body. So this is in red because it's a failed wave lower, and this candle body is lower than this candle body here. So then how do we know price is no longer going down? Because once again we have candle body over candle body. So this is the beginning of wave 5. We need to see price pushing above wave 4. Now on a wave 5, oftentimes it can just be a wick. But in this particular case, today, price pushed well beyond wave 4, all the way up into, this is all trending up. There are no pullbacks here. This candle body intersects this candle body. There is no gap here. And then we got this candle body still coming up. And now we finally get candle body here under candle body. So that terminates wave 5. And as you can see, the Dow did move up another, what is that, about another 60 points, maybe 70 points. So let's go back to our subject for today. Let me bring this over here. Keep it in my focus. So let me zoom in here. So expectations for reversal. We do expect price to reverse even on a trending day. So for the Dow, so far it's been a trending up day. Here, the Dow hits a high of 46,721 right here on this candle. Typically, when you hit 20 levels, 40 levels, and 60 levels, and 86 levels, you can see price reverse. So after this good move, I was expecting the Dow to reverse here just a little bit, and we do get this. So I'm going to document. So typically on a move like this, I would expect a 3-wave pullback. Where would I expect the pullback into? Well, this brings me to these circles. So let me move this circle out of the way now. This circle right here, or it was right here. Let me draw a line where it was. Put it at the put it at the candle body close. There's a gap there between this one and this one. How do I know that there's a gap? Because this blue wedge tells me that the open of this candle is above the high of this candle. And you just to confirm the price, close of this candle is at 46,648. The open of this candle is 46,649. So once again, a 1-point gap. So then this becomes a target. So you might say, oh, that gap was filled by this tail and this tail. And I would, my observations are, no, that's not true. What you need to see is 4 candle bodies connecting this area. So if we look right, we'll see a candle body here connecting, candle body here connecting, candle body here connecting. Now we don't have a 4th one yet, but this became my target zone right here for a short. So we would expect at this point, since it's made an 8-wave move, we would expect at least a 3-wave pullback. So let's see if we got that. I'm going to start documenting waves. We're going to use a different color. So it's going to be a wave 1 because we're looking for a reversal now. Let's change the color on this. Maybe a different color. So we'll go with this magenta. And that goes right here. So on this move down, then price goes candle body over candle body. This blue wedge tells me once again that this candle body opened above where this candle body closed, and then price goes up. And then all of a sudden we're getting price now candle body here under this candle body. So this would be your place to go short when you see this happening, and your first target would be here. But let's continue to document the waves. Oops. It's going to be slower because I'm doing this in real time. And then we'll just follow price down from here, and we'll see where wave 2 ends. It's right there on that green candle. Okay. So let's come and look at this. So we got the wave one, magenta, wave one down, the pullback. We get candle body under candle body. That's the beginning of wave two. Price goes down. We need to see price below wave one bodies. So here we get the price below wave one body. And then this second candle, even though it's actually not lower, this is the body, right? The top, the close of this candle right here is below this body here. So this is wave two. How do we know that that is the termination of wave two? Because then price pops back up, and this is candle body over this candle body. 2 minutes later, this is candle body over candle body. So that's the end of wave two. And lo and behold, on this down candle here, this hit this gap fill. And so that was my target, that gap fill. Precisely? No. I think that gap is precisely at, let's see, the close of that candle is 46,648, and you'll see, and this one opened at 46,649. I'll show you my order. I closed it at 49. Now, I'm still expecting a third wave down, but I'm not expecting a big move. So if we look here, this is poor structure right here. This is poor structure. Why? Because we cannot connect 4 candle bodies in this section yet. So this, if you are looking for a further retrace, this would be the retrace zone, a dip all the way down into here. Once again, when price dips down into here, it doesn't need to print a candle body. It might. It can just be a tail that dips down in here and completes the 3-wave move. Yeah, at some point, I expect 4 candle bodies to come and fill this area on a 1-minute chart. Do I expect it to happen immediately? The answer is no, because this stock, or this Dow future, as you can see, is uptrending today. So, yeah, if you're going to do counter trend trading, you've got to look left. The entire thing, if you're doing counter trend trading, is you have to look left. You have to know where your gaps are, where your poor structure is, and where you cannot connect, right? So poor structure for me is where you cannot connect 4 candle bodies, 1-minute candle bodies. Now let's go back to this white circle. So when price is trending up and we're getting this pullback, and then price fails on this wave 5 because price goes up and makes a lower low, so this begins wave 5 because this was a fail. So where would you go long? Well, I would go long right here. When price closes above this internal wave 5, right, this orange one, let me zoom in on that. When price goes above this wave 5, so it actually closes right here above, I would go long. Where's your stop? Your stop is now down here at the previous wave low. Whether you use candle body or whether you use the tail, frankly, I don't care. Use the one you want. Now, and then you're just expecting if it's going to make a 5-wave move, which we're expecting, you need to see price moving above wave 4. And yes, oftentimes it can just be a wick. It actually doesn't even have to be a candle body. But in the case of today, price moved away from wave 4 significantly. The other thing to put into context of that is you're going to want to know what the average daily trading range for the Dow is, and it can be, without me looking at it, my guess would be several hundred points. So if the Dow's only moved 250 points at this point in time, yeah, you might expect it to move at least another 150 points, and it did exactly that today. So let's see, let's come back to, let's just talk about entries and stops. So if you're a patient trader and you see this wave 1 happen, right, and then price breaks, closes above, right, this wave 1, get long here. Your stop is now at the bottom of the wave 2 low. So whether you use the candle body here or whether you use this tail here, that's fine. Once again, it doesn't matter to me. You just need to put a stop in place, and it needs to be at the bottom of the wave. Well, same thing here. When price pulls back, where do you get long? Well, when price goes above wave 2. So maybe you get long here. Where's your stop now? Your stop net is now down here, the bottom of wave 2. Price goes up, okay, pulls back. Let's say you get long. So you see this immediately when this candle closes, you get long. Your stop needs to be bottom of the wave. So I'm always talking about candle bodies, but you can also reference the low, the wick, right? Or even a lower candle body that might not meet the criteria. Is you could put your stop here. So then price goes up, pulls back. Let's say you go long here because it's candle body over candle body. Your stop would now be here. You got stopped out. Price closes above this candle body, closes above here, above this candle body, this wave 5, this interim wave 5. Get long, stop is here, and then you're looking for price to go above wave 4. So let's look at my short now. Let's zoom in on this. Turn my trades on. So this wave 1 short happened, pulls back. Okay, I see this candle. I quickly look at this. Okay, I've got multiple candle bodies in this area. 1, 2, 3, 4, 5, 6. They're all connecting. We throw a tail. I'm expecting at least a second wave move down. So I get short on this candle. I get short at 86, which is roughly right here. About the center of this candle, right around when the candle closed is when I got short. Where's my stop? My stop is then above this candle right here, because, well, actually my stop is above, is short, is my stop is up here. Why? Because price hasn't made candle body under candle body yet. So here we get candle body under candle body. Now I'm expecting that price continue to move down, make the wave 2. I can move my stop down to the top of this wick, right? If I moved it to the top of the candle body, I would have been stopped out, but I didn't. I moved my stop right into here, and then you just simply sit and wait. And then you can see, I'll scroll to the right. Price comes down, down, down. Okay, makes a new low, pops back up, does candle body over candle body. This is just an internal wave and a larger wave 2 move down. Then price dips down, okay, and it dipped down below through that yellow line, and I filled my order, my limit order at 46,649, and you can see price immediately popped up out of that gap. That yellow line represents a gap. It immediately popped back up. So let's just zoom out and see what price has done. So in terms of filling this gap with bodies, it got one candle connection. Let's see, this opens at 50. No, that's not a, it fills part of the gap, but not all of the gap. 2 candle bodies. So there's only 2 candle bodies. One, let me see where this closed. 48. No, this doesn't actually fill that gap. So we only have 2 candle bodies at this point in time filling this gap. So would I take a short now? No, I've got zero interest in shorting this thing from this point all the way back down in here, because this is an uptrending day. There's a gap right here which you can see. So maybe price pops all the way back up into here and fills this gap with another body before it moves down here at some point in time. When? I don't know, but I definitely believe it will happen on a 1-minute chart. So let me zoom out. Just make sure we covered all the topics. So we did 5-way move, and we covered even more. Reversal expectations, once again, reversal expectations should be low, should be no more than 3 waves after a 5-wave move, and your targets would be poor structure, gaps, fair value gaps. We covered entries and exit, we covered our stops, we covered the circles. So that's it. Thanks for watching.